Hello everybody, welcome to another one of my investing videos. My name is Mark, and in this video today is the first day that I actually had to roll up my call option that I bought on Twitter. I should say my weekly call option that I sold against it. So let's go ahead and go to my transactions and let me show you what I did. If you've been watching my videos, you know by now that on September the 10th, today is October the 20th, 2018. On September the 10th, 5 weeks ago, a little over a month, I bought a call option on Twitter, a $30 call for $7.70 premium for a total cost of $777.71. And ever since then, week after week, I have been selling to open call options. So here made $50, here made some more money, next week made 28, next week 34, and then 40, on and on. And here today, right, actually it was almost today, yesterday, it's just past midnight, and it is yesterday on the 19th, I actually bought to close my weekly call option that I sold to open a week ago. Here on the 12th, I sold a weekly call option, $29 strike price, took in $33 minus commission, $25. So here today, and this is how you roll up call options. So what you do is you buy back the same call, and so I bought it back for $72.71. Looks like a loss, but oops, look at this. I immediately sold another call option, and I took in $157.29. So if you take that $157.29, subtract $72.71, you get like what, $80, $85 and some change, somewhere around $85. I don't have a calculator, but about $84, $85. Okay, so I took in an $85 credit, bought to close this contract, which was going to expire at the end of close today, and then I turned around and sold another one a week later for October the 26th for an $84 credit. And look at this, okay, bought to close $29 call, sold to open a $30 call. So guess what, now no more problems with intrinsic value or strike price, because my long call is at $30. No more of this selling below the money strike prices. Now it's an at the money strike. I bought a 30 and I sold a 30, and that's how you roll up a call option. Now if I would have waited to the end of the day, Twitter, if we take a look at Twitter, actually closed below $29, but I don't mind what I did, because when I closed it, see, it actually closed at $28.83, so that call option would have expired worthless. But if I would have tried selling the 30, let's look at what the $30 call is right now. Okay, $30 call is only, the bid is $128, the ask is $134, right? So I wouldn't have got as much money if I would have tried selling to open like this, put in my orders, sell to open, one contract, review the order. I would only got $128. See, so even though I didn't get zero, even though I had to spend a little money to buy it back, I got more money when I rolled out my call option and I sold to open another one. So let me put in Twitter, sorry about the typo, and let's pull up the option chain here. So I sold to open, actually I need to go to my transactions, not the option chain. And so I sold to open and I got $165. So that's $40 more that I got. So that's the lovely thing about rolling these out. And I got $1 higher call. So not only do I get this extra $84 or whatever, I also get $1 uptick in my put. That's called rolling up a call option. And that, ladies and gentlemen, is the way you make money, rolling out call options week after week after week. And by the way, just to close out this video real quick, let's take a look at what I'm doing. How am I doing so far on my investment, my total investment. Let's take a look. Okay, so on September the 10th, I bought my call for $777, and then let's first add up all the green numbers. That's all the money that I've made selling weekly calls every week. So 50 plus 48 is 98, plus 28 is 126, plus 34 is 160, 200, 225 plus 157 would be 382. Now let's add up the little cents. 29, 29. So let's round it up to 30 to make the math easy. So 30, 60, 90, 120, 150, 180, 210. So let's go ahead and roll it down to $2. So $384. That's how much money I've brought in selling weekly calls after weekly calls. And then let's subtract the little red numbers. So 384 minus 3, minus 4, minus 5, minus 6, minus 72, so 78. And then the numbers 71, 2, 3, 4, 5. So 78, 75. Let's round it up to 80. So 385 minus 80. So I've made $300, a little bit over $300 in. Today is October the 20th. I bought this on September the 10th. So in 5 weeks, I've made $300 on this $777 investment. So this call option that I bought doesn't expire till January of 2020. I still have another 15 months to go. So if I'm making $300 a month, I mean, do the math. I think I'm doing quite all right. I am very happy with how things are going for me. And just for kicks and grins, let's go to my gains and losses. You are going to laugh when you see this. So gain and loss, slow computer taking its sweet time. Here we go. Okay, finally it comes up. Now let's put in from September the 10th, let's put in the 9th to October the 20th. Click the view and let's see, just for kicks and grin, you're going to laugh at this. So from September the 9th to October the 20th, here we go. I've made, looks like a 187% return. So it's adding up all the numbers. Maybe I gotta put in realized. That's the realized gain. Oh, that's because it's not counting my last covered call that I sold. So it's not counting the weekly call that I sold, where I brought in the 100 and whatever dollars it was. It's only counting the other ones, but still 147.99. I think I'm doing pretty okay, and I like how it shows, 3,000% gain and all this, right? But in reality, to show you just exactly what my return is so far as of today, remember I brought in $300 and my total investment was $777, but really my whole account is like $2,400 and some change. So if I made $300 on a $2,400 account, 20 and some change, that's about a 15% return in 5 weeks. So I feel good about how I'm doing, how things are going for me, and I will leave you with a final thought as I end this video. When you're trying to make money, no matter what you're doing, don't think to yourself, well, Twitter is making me money or Apple's making me money. Don't think that this stock is going to make money or lose money. Okay, you need to rely on your strategy. You need to have a money-making strategy. The reason why I've been making money on Twitter, it isn't because of Twitter. I mean, I bought a $30 call on Twitter back on September the 10th, and Twitter has been doing nothing but going down since then. So I was wrong. I've been wrong this whole time about Twitter. Okay, if we look at the chart and we go to like a little 3-month chart here, okay, and then I put a little trend line, okay, on September the 10th, I Actually, you can't even see that very well, so let's put in a month. That's even hard to see. Well, you know what I'll do? I'm going to go to my trading view. So let's bring that up. Trading view is a much easier website to see if you can deal with the ads. Let's bring up Twitter, and let's go ahead and bring up the full chart, and let's put in a 1 month view. You're going to see some lines because I like to do technical analysis. Let me get rid of those, and let's go to 1 month. So there's 1 month right there, and let's go back to September the 10th. Okay, September the 10th, it would be way right here. So September the 10th would be like right in this area right here. So when I bought Twitter, okay, let me draw a little line here. When I bought Twitter was at about let me bring up my crosshairs. Twitter was at about $30 and some change, almost $31 a share. And then ever since then, you can see that Twitter has been doing nothing but going down for the last month. So I was wrong buying that $30 call option on Twitter. And then finally, right in this little area, bring up my crosshairs again. Right in that little area right there. Why does it keep doing that? Okay, that's kind of a pain. Alright, let me get rid of that. So right in that little circle area, you can see very briefly it went up to $30. So I have been wrong as you can be, but I'm still making a heck of a lot of money. I'm doing very well. So it's not Twitter. It's not because of Twitter that I'm making money. It's because of my option strategy that I'm making money. And my option strategy is very simple. I buy leap options, long-term calls, and then I sell weekly calls. And the difference in the theta, or in the time value, is astronomical. And that's why it's so darn easy to make money on a stock like this. And that's the reason why I'm doing so well. So again, you know, if I'm making $300 in 5 weeks, that's what, an average of $60 a week. So in the next 14 months, I mean, I think that this $2,400 that you see is going to be up to around $5,000 or $6,000 if things keep going well for me like this. Now, there's one glitch. Twitter has their earnings coming up next week on the 25th. And so right here, next earnings announcement, October the 25th. So what could happen is Twitter could come out with a bad earnings and go down 20%, and then that's the only way that I could get hurt, at least here in the short run. Because if Twitter goes down 20%, it's going to be like $22 a share. And if Twitter goes all the way down to $22 a share, I can guarantee you I'm not going to be selling $29 calls and bringing in $40, $50 a week. I'll be lucky to get $5 or $4. I won't even make the commission, so I'll have to sell really low strike prices to continue selling weekly calls at a profit. And that's when I will open up my butterfly. I'll buy another call, and then I can sell those lower strike price calls. And if Twitter starts going up again, I don't have to worry about a $6 difference between the $30 call that I bought and the lower calls that I'm going to sell, because I will buy a lower call option, probably like a $24 call or a $25 call, or if it does go all the way to $22, I might buy a $20 call. Either way, that's my plan. Things are going well for me. I hope you enjoyed this video, and as always, if you have any questions or comments, feel free to ask. Thank you for watching this video. I will see you in the